Okay, good afternoon. This is the 3:45 p.m. live screen show on Monday, September 21. And it has been quite a volatile day in the marketplace. Currently, we have the SPY up 53 cents at a 69.77 as I am circling the number on the screen here. The number, even though we are green on the SPY, the trend is still down for today. The volume, a meager 87.3 million shares with 15 minutes to go. Again, if you look at these green bars on up days, they are much lower volume than on the down days. As you can very easily see, that is never a bullish sign. Never. The Dow Jones up 70 or 94 and a half at a 76.3. Again, this daily trend is going to be heading down. This is a bounce day to the upside. The NASDAQ, on the other hand, is now red this afternoon, down nearly 9 points at a 71.93, and the view is very similar to the SPY and the Dow Jones. And the Russell 2000 is down 3.5 points at a 74.83. So we got the Dow and the S&P up. We have the Russell and the NASDAQ down today. We have a market that has no idea from day to day what it wants to do, but the trend is definitely lower. This is nothing more than a bounce. Hey, with Yom Kippur on Wednesday, we could, they could keep it up tomorrow and Wednesday green, okay, on light volume. It very well could happen. Over here on the live streaming feed, the left-hand side of your screen here, nothing much is changing here. The lowest number we have is Corvo at a 2.85. So there is nothing near extreme oversold, however. Nothing there. This never ends good. We've got to get numbers extreme oversold. Over here in the large cap sector, on the daily, same situation. We have nothing that is, well, we just crossed, Sprint Nextel just crossed 0.97 extreme oversold. Finally, we have something in the large cap sector, but as you folks know who have been here for a while, 0.97 is just the beginning. That number is not nearly good enough, but at least it is an extreme oversold condition on a large cap. Small cap stocks, quick check-in. Anything showing up? We have nothing in the small cap sector worth anything. These stocks under $1 do not count. They do not count. No volume anyhow on those ones there. So in essence, we have a bounce day after last Thursday and Friday. May last another day or two. We shall see, but I am not at all positive that we're going to continue to higher after the next couple of days. We have a couple of new subscribers here to the website. And for those subscribers, I want to pull up the index quarterly charts to show them exactly where we are on a longer term basis. Now, if you follow here the strategic numbers that I'm circling up here. Okay. Back in the dot-com era on the S&P 500 quarterly index, we got as high as a 100 number during that dot-com era on a quarterly basis, the S&P, before the market then started cracking to the downside, and we ultimately ended up down here. So we went from a price on the SPX 1133, and before it ultimately finished, we were down here in the 840s, 860 areas before it all ultimately finished down in March of 03. We moved our way back up on a quarterly basis to a 99.83 on the SPX quarterly that ended on 9/28 of 07. That was during the subprime mortgage collapse, market crash. We closed it there at 1526 on the quarter ended 9/28/07, and we ultimately finished at the bottom of the risk range down at a 797. Why is that important for the new folks? It is important for this simple reason. If you see where we are now, the quarter ended on March 31st, 2015. The S&P 500 finished with a 99.99. And it actually, when we started the second quarter, it stayed at a 100 number for most of that quarter until the last week in June, where it then closed slightly lower. And as you can see right now, the quarterly number is down to an 80.25. We are no longer outside the top of that risk range like it was here. Ultimately, we are going to end up near the bottom of that risk range. And that, folks, is a long way down from where we are right now. The same can be said for the Dow Jones Industrial Average. The same look up here. I'm circling it on your screen. Same here during the subprime mortgage collapse. And we ultimately got up here to a 99.71 on the Dow. Quarter ended 12/31/2014. We are now down to a 61.56. We may have some stops and starts along the way on a quarterly basis, but we are ultimately going to end up near the bottom of these risk ranges. That, my friends, is a long way down. We're talking 11,514 here on the Dow quarterly to the bottom of that risk range. We still have a long way down. This may take a year or so to play out, but you have the idea of what we're talking about. The Russell 2000, you can very clearly see what's happening here. Same situation. We ultimately will end up near the bottom of that risk range, which is a long way down. And of course, the NASDAQ, which is the last index to break, it had a 99.99 at the end of June and is now red for this quarter. Has a couple of weeks left in it. However, it is flirting with its risk range channel break right here, which is 4,760. So it is slightly still outside the top of its risk range, but it too will ultimately succumb. That is the last index to break inside on the way to the downside, the bottom of that channel, somewhere down near that 2,700 level. It will happen, folks. It's not a question of if, it will be a question of when that occurs. So for you new subscribers, this is what we are anticipating happening. It's happened a couple of times before when we've had this look, and it will happen again. This time it will not be any different. And this is when these numbers were up here in the 99.99 areas, we were getting a negative divergence here by the power bars. The prices were moving higher. The strength of the move higher was less and less power behind that move. So that gives you an indication of why, for you new subscribers, we feel 99% positive that we have seen the highs in the marketplace, and they're ultimately going to end near the bottom of their risk ranges. So I wanted to give you that quarterly look. Hopefully you understand what we're looking at on a longer term basis. And now we are back to the daily chart here. And this was important. What transpired here at the end of August when the market had that big correction was important. The channel breaks were huge. this is the beginning of a trend change on the daily time frame. So instead of this sideways action between the risk ranges for a long time, this was significant, and this is the beginnings of in my opinion, a high probability that we move back up middle of the range and start rolling back over to the downside. So that's pretty much what I have for you here today. I'm not chasing anything. There is an accident waiting to happen, however. I want to show you Facebook here, and it's up over 1% here, sporting a 99.93. I am looking to short this thing here. If it opens green tomorrow, that number goes to a 99.96. It's up, 11 days in a row here, green. I'll give it till tomorrow. I'll be looking to short this thing with a starter position and scale in with a 99.96 if it opens green tomorrow. So that's all I have for you here today. Have a good evening, and we'll set up shop tomorrow morning. Take care.